Ever wonder how the rich keep getting richer? It's not just about earning more money, it's about mastering the art of using debt to their advantage. While most of us fear debt, the wealthy see it as a powerful tool for creating even more wealth. Today, we're diving into 10 ways rich people make money with debt. By the end, you'll see debt in a whole new light. 1. Real estate leveraging. Rich people buy properties with borrowed money. They take out loans to buy homes, apartment buildings, or commercial spaces. They rent these properties out, using the income to pay off the loan. Once the debt is cleared, the property is theirs, often worth much more than when they bought it. Imagine buying a $500,000 apartment building with just $100,000 of your own money. You borrow the rest. The tenant's rent covers the loan payments, and after a few years, you own the building outright. Robert Kiyosaki emphasized, real estate is not about how much money you make, but how much you keep, how hard it works for you, and how many generations you keep it for. Robert Kiyosaki famously leveraged debt to purchase rental properties, using the cash flow to pay off the mortgages while building a vast real estate empire. 2. Business expansion. Entrepreneurs borrow money to grow their businesses. They invest in new products, services, or markets, expecting higher profits. If done right, the profits far outweigh the debt. Example, a tech startup borrows $1 million to launch a new app. The app becomes popular, bringing in $10 million in revenue. The debt is easily repaid, and the company is left with a massive profit. Mark Zuckerberg highlighted, the biggest risk is not taking any risk. In a world that is changing really quickly, the only strategy that is guaranteed to fail is not taking risks. Mark Zuckerberg expanded Facebook by borrowing funds to acquire Instagram for $1 billion in 2012, a move that significantly increased Facebook's market dominance. 3. Stock market investments. Wealthy investors borrow money to buy more stocks, a strategy called margin trading. If the stocks rise in value, they sell, repay the loan, and keep the profit. An investor borrows $100,000 to buy shares of a booming tech company. The stock price doubles, and they sell for $200,000. After repaying the loan, they walk away with $100,000 in profit. Warren Buffett pointed out, the stock market is a device for transferring money from the impatient to the patient. Warren Buffett has used margin trading to buy undervalued stocks, holding them until they appreciated significantly, multiplying his wealth. 4. Tax benefits through interest deductions. The interest paid on some types of debt is tax deductible. Rich people use this to reduce their tax bills, effectively lowering the cost of their debt. A real estate investor takes out a $1 million mortgage. They pay $40,000 in interest each year. They deduct this from their taxable income, saving thousands in taxes annually. Kiyosaki has emphasized the importance of using tax strategies like interest deductions to maximize wealth, allowing him to keep more of his earnings. 5. Acquiring other companies. Big businesses often borrow money to buy out competitors. This increases their market share and profits, which can more than cover the cost of the loan. A large corporation borrows $500 million to buy a smaller rival. The acquisition boosts their profits by $200 million a year, making the loan worth it. Warren Buffett observed, in the business world, the rearview mirror is always clearer than the windshield. Warren Buffett's Berkshire Hathaway borrowed funds to acquire companies like BNSF Railway, significantly expanding its market share and boosting overall profits. 6. Buying income-generating assets. The wealthy borrow money to purchase assets that generate passive income, like dividend-paying stocks or rental properties. The income from these assets pays off the debt, and once it's paid, the income becomes pure profit. Example, someone borrows $300,000 to buy a rental property. The rent covers the mortgage. After 30 years, the debt is gone, but the rental income continues. Warren Buffett advised, do not save what is left after spending, but spend what is left after saving. Warren Buffett invested in dividend-paying stocks like Coca-Cola, using borrowed money. The dividends paid off the loans, and Buffett kept the profits. 7. Leveraged buyouts. Rich investors borrow to buy companies, using the company's assets as collateral. They improve the company's profitability and sell it for a higher price, paying off the debt and keeping the profit. An investor borrows $200 million to buy a struggling retail chain. They revamp the stores, boost sales, and sell the chain for $500 million. After repaying the loan, they pocket $300 million. Warren Buffett remarked, you only have to do a very few things right in your life so long as you don't do too many things wrong. Henry Kravis, co-founder of KKR, used leveraged buyouts to acquire companies. He used the company's assets to secure the debt, then sold the company for a significant profit after increasing its value. 8. Investing in hedge funds. Hedge funds often use borrowed money to amplify returns on investments. Wealthy individuals invest in these funds, benefiting from the high returns generated by this borrowed money. A hedge fund borrows $10 million to invest in high-growth stocks. The stocks perform well, doubling the investment. The fund repays the loan and still has millions in profit, which is shared with the investors. Robert Arnott noted, "In investing, what is comfortable is rarely profitable." George Soros, a legendary investor, utilized borrowed money in his hedge fund to make massive profits, particularly during his famous short sale of the British pound. 9. Funding lifestyle. While assets grow, rich people sometimes borrow money to fund their lifestyles, like buying luxury homes or cars. While their investments grow, they bet that the return on their investments will exceed the cost of the debt. Example, an entrepreneur takes out a loan to buy a $2 million yacht. Meanwhile, their stock portfolio, worth $10 million, grows by 15% annually, far outpacing the interest on the loan. Robert Kiyosaki rightly said that, "Don't work for money, make it work for you." Elon Musk funded his lifestyle by borrowing against his stock in Tesla, allowing his wealth to grow while enjoying the fruits of his success. 10. Strategic debt restructuring. When interest rates drop, the wealthy refinance their debt. They replace high-interest loans with low-interest ones, reducing their overall debt cost and freeing up cash for other investments. A real estate mogul refinances a $10 million loan, cutting the interest rate from 5% to 3%. This saves them $200,000 a year, which they reinvest into new properties. Warren Buffett stated, "The most important quality for an investor is temperament, not intellect." Donald Trump has strategically refinanced his real estate holdings multiple times, lowering his debt costs and freeing up capital for new investments, allowing him to maintain and expand his empire. Debt isn't just a burden, it's a powerful tool. The rich use debt strategically to build wealth, create income, and expand their financial empires. It's all about knowing how to use debt wisely. Now that you've seen how the wealthy do it, think about how you can use debt to your advantage. The key is to leverage debt in ways that bring in more money than it costs you. Ready to start thinking like the rich? It's time to take control of your financial future.